It's no secret that investors' morales are steadily declining as Tesla stock market prices continue to drop. But before you go into despair, we might have some good news that has led us to believe that the storm is almost over and that share prices may just explode in the coming weeks. What has Tesla been up to in the past week? What are experts saying on the matter of the stock price going down? Will the share prices be making a rebound soon? All will be revealed in today's video, so keep watching to find out. Tesla Incorporated is one of the most popular controversial stocks, with a following of about 1 million people, especially since Tesla's stock price has dropped by more than 25% since early November 2021, from $1,236 to $915 on February 3, 2022, and has recently dropped even further. When comparing Tesla to the S&P 500 and the NASDAQ, we can see that while all have fallen significantly in the last month, Tesla has fallen about 3 times as much as the S&P and twice as much as the NASDAQ, implying that there is a serious investor concern about Tesla's near-term future price. A lot of factors have led us to believe that Tesla stock might explode next week following the continuous drop of the previous weeks. The market closed this week at $856.98, and we believe it's only a matter of time before the number begins to go up. There have been various bullish indicators that have led us to believe a rebound is imminent, and we'll start with some factors on ground. Some Tesla personnel and contractors at the Tesla Gigafactory, Texas, recently shared videos from inside the factory on Snapchat, giving us a rare glimpse at the assembly lines. At Gigafactory, Texas, things are heating up. Late last year, Tesla stated that the facility created the first builds of new Model Y vehicles. They have also noted that the first new Model Ys made at the plant will be delivered by the end of the first quarter, most likely in March. The commencement of Model Y manufacturing at Gigafactory, Texas is important for Tesla's growth. It represents the introduction of a new version of the electric SUV with Tesla's unique structural battery pack and 4680 battery cells. Tesla hasn't said how the new architecture would affect the new Model Y specs, but that information should be available soon when the Environmental Protection Agency and National Highway Traffic Safety Administration implement regulatory certification. Tesla had revealed some photographs from inside the facility with its recent earnings report, but we had only seen a small portion of it so far. Thanks to a certain staff member who offered to show us around the plant, we are able to get a rare look inside. In addition, Tesla's factory outside of Berlin is ready to begin production of new vehicles, even though the essential government approvals are still pending. This is sure to stir up excitement, and we don't need to tell you how dependent market fluctuations are on the sentiment and psychology of market players. There's also the Ukraine invasion situation to consider. As Russia continues to threaten to invade Ukraine, we can expect an impact on stock market prices across the board. No looming threat is obvious for now, but some news outlets say that troops were spotted preparing for an invasion. What's the correlation? Global markets have been pushed down by the possibility that Russian President Vladimir V. Putin may authorize an invasion of Ukraine. The stock market climbed as Russian officials declared a partial army pullback from Ukraine's border, and we predict the rise will continue once the threat is obsolete. However, President Biden cautioned on Thursday that the risk of an invasion remained very high as shelling between Ukraine and Russia-backed separatists increased, raising fears that the situation was intensifying. Markets are apprehensive about Russia's force buildup and lack of trust in Putin's assertion that they're beginning to withdraw soldiers from the region, was the statement of Chris Zaccarelli, the chief investment officer of Independent Advisor Alliance, an investment advising firm. Concerns about a possible Russian invasion may cause stock market losses in the short term. Still, most of the geopolitical market impact in the United States will probably be short-lived if history's any indication. In a note to investors, Sam Stovall of Center for Financial Research and Analysis stated, "The equity markets are more at danger from the aftermath from the war on inflation than from a prospective invasion of Ukraine. So investors can rest easy on the news, putting a substantial long-term dent in the stock market." The president of the Federal Reserve Bank of St. Louis, James Bullard, warned that without central bank intervention on the interest rates, inflation might worsen. During a panel discussion at Columbia University, he observed, "We're at more risk now than we've been in a while, and this may get out of control. One scenario would be a great shock that we can't predict right now, but it would result in even greater inflation. That's the kind of situation we want to avoid at all costs. Inflation is broadening and accelerating in the economy, according to Fed Chairman Jerome Powell, who told CNBC in an interview that more near-term rate hikes are needed to curb domestic price increases. Some investors are unconcerned about the Federal Reserve's projected interest rate hikes. In a 2022 market preview analysis, BlackRock analysts noted, "We expect the Fed to hike rates, but we see its cumulative response to inflation as more restrained than ever before." According to Refinitiv statistics, Wall Street census projections predict overall S&P 500 profits will climb by around 11% in 2022. Inflation can be beneficial since it stimulates job development. High inflation, on the other hand, might stifle company profitability by driving up input costs. All of this can be perplexing for investors because inflation appears to affect economy and share values at different rates. Because there's no single correct solution, individual investors must sort through the clutter to make informed investment decisions during inflationary periods. During periods of rising inflation, certain types of equities tend to do better. Investors attempt to predict the elements that influence portfolio performance and make judgments based on their predictions. Stocks should in theory provide some inflation protection, since after a time of adjustment, a company's revenues and earnings should grow with inflation. This may encourage more people to invest, thereby raising the value of stocks in general. One of the reasons the automobile brand is controversial is its outspoken CEO Elon Musk, who isn't afraid to ruffle some feathers. He seems to have a huge influence on market sentiments and investor behavior. His other company, SpaceX, has begun construction on a Starship launch platform at NASA's Kennedy Space Center. But Musk said that the business didn't want to interrupt present launch operations in Florida due to research and development work on the rocket. Some residents have praised the company's quick expansion in Cameron County for creating jobs and enticing tourists, while others have criticized it for displacing a seaside village and jeopardizing the wildlife preserve surrounding Starbase. As the two companies often operate in some sort of synergy, news on SpaceX typically affects Tesla stock prices as well. History has proven this, especially in 2020, when despite the lack of substantial information concerning Tesla, its stock rose massively, surpassing the market. Most experts attributed the increase to SpaceX's successful launch of 2 astronauts, which served as a credibility boost for Elon Musk. Furthermore, as part of a bipartisan infrastructure proposal that includes $7.5 billion to establish a huge network of electric vehicle charging stations in the United States, the Biden administration announced a plan to grant $5 billion to states over 5 years to support electric car chargers. This initiative is at the core of the administration's larger plan to tackle climate change caused by humans and accelerate the renewable energy transition. The Biden administration has prompted electric vehicles as being more economical for Americans than gas-powered automobiles, pledging that by 2030, half of all vehicles sold in the United States would be electric or plug-in hybrids. As the leading electric vehicle brand, Tesla will derive sales from this, most likely making the value rise even more, and suggests a good stock market prognosis. Biden had refrained from naming the brand while citing competitors' names, but since a petition was signed on this cause, he had recognized Tesla as the leader in the field. Experts and analysts seem to foresee a rebound as well and are encouraging people to buy the dip. Despite Tesla's warning that production would have to be slowed down owing to supply chain concerns, Deutsche Bank and Morgan Stanley both recently expressed optimism about the firm. Morgan Stanley set a $1,300 price objective for the company for the next 12 months, while Deutsche set a $1,200 target. Dan Levy of Credit Suisse confirmed the recent decline in growth stocks since the beginning of the year, claiming that Tesla has been disproportionately harmed. He did, however, argue that the stock will eventually rebound from its current downturn. Tesla's future holds a lot of promise and is indeed tough to forecast. We agree. However, with the bullish indicators that a rebound is soon to occur, do you think Tesla's stocks will go up, or are we in a further decline next week? Comment down below.